how's everyone doing out there? I'll be with you guys shortly. Hope everyone had a good weekend. If you can, please let me know how the audio's coming in. Appreciate that. Hey, hope everyone's doing fine. I'll be with you shortly. Again, glad you guys could be here. Samari, Pabar, James Richter, Once in Exile. Yes, you made it, Once in Exile. John Lowe, Seymour Rivers, how you doing? Again, James Richter, Anna Maxwell, how you guys doing? I'll be with you shortly. Thanks for the feedback, letting me know that the sound's coming in okay. And we'll get this going in about 30 more seconds. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, and this is our weekly live stream. Glad you all could make it here. We do a little bit of a roll call, see who made it in the house today. Paul Bar again, Once in Exile. Glad you're here. James Richter, 55. Thank you for the feedback. Dr. Hemp, 73. Okay. Sumari again. Fat Vegan, how you doing? The MiG, 26. Aloha. Michael Morton, how you doing? If you are new, go ahead and type new and where you're from so we can acknowledge you. We'll try to acknowledge you, but go ahead and type new and where you're from. If you are new to the live stream, appreciate you being here. And again, as always, do subscribe, hit the bell to be notified on updates, and give us a thumbs up if you like what we do. We really do appreciate your support, truly do. And as always, you can find us on social media. Silverbullion.com.sg is our website where we specialize in systemic wealth protection. So if you know what's going on or you have a feeling something's not right with what's going on, give us a call, send us an email, and we'll let you know the different programs, the different services that we have that can help through what's coming ahead. Systemic wealth crisis is what we specialize in. Silver Bullion SG is our Facebook handle. Silver Bullion PL for Private Limited is where you can find us on Twitter, bit.ly/SBTV iTunes or /SBTV Spotify is where you can find just the audio versions. And again, as always, please do join our Crisis Tracker group. If you have that app, Telegram, either on your desktop or on your mobile phone, go ahead and look for us at Crisis Tracker. This is where we go ahead and we will put news items, roughly 1 or 2, maybe 3 a day. Try to get it in there a day where it's not an overload, but it's exactly what you need to kind of see what's going on and help you form your opinions and get you through the things that we all need to get through. So once again, appreciate you guys being here. Let me see a little bit more roll call here. Paul Milford, kia ora. Pablo Pina, how you doing? Once in Exile, how you doing? Fat Vegan. I need more silver. Well, I tell you what, we had a pretty good opportunity to buy silver again. We had a bit of a pullback. I know I know that I bought some silver during this time. I hope you folks had a chance to get some silver as well. The ratio kind of went back up to almost or at about 80. I think it's coming a bit back down, but we'll go ahead and take a look at that a bit later. Fat Vegan, thank you I appreciate that very, very much. Bruce Jones, how you doing? Miriam Lewis. Okay, these are some new names. Pietro Saravalle, excuse me. Canada, Toronto. Glad you could be here. Welcome aboard. Fossil Man, Washington Coast. Fossil Man, anything to do with your age? It's a good one. Maybe I should change mine to Fossil Man 3, huh? Anamaxa again, always be funding. Good you're here. 495. Joe San Martin, White Orchid, Alan McLemore. Okay, a lot of new faces. So again, welcome aboard. Thank you all for being here. Um, Quite an interview this past week with G. Edward Griffin, and we'll touch on a couple things he said, as well as wanted to get back to Peter Schiff, the interview we had with him, and touch on some things we said. And but our upcoming guest, always interesting, very very interesting with what he has to say. It's going to be Steve St. Angelo from the SRS Rocco Report. So Steve, he's the author of that very popular and insightful SRS Rocco Report. And Steve considers studying the impact of energy on the global economy one of the most critical aspects that impacts the prices of gold and silver. Have to agree with that. Steve also has a YouTube channel with the same name as his website, so I do hope that you get a chance to visit his channel and support his channel as well. I tell you what, he has some really great information, and a lot of times, we being silver and gold people, platinum, palladium, we tend to forget the role that energy plays, or the oil that energy plays. And I know sometimes, we when we go out and we look at something, and we see, maybe something costs $50, and I know a lot of you guys out there will do this. You'll tell yourself, hey, that's 2 ounces of silver. I'd rather go buy those 2 ounces of silver. Well, it's the same with oil, but the thing is, we have a we don't exactly buy barrels of oil and take it home. But if you could price things in oil, you probably would think a little bit differently as well. And that's something that Steve talks about, and I think he's right. He's very right in that. So moving on, every week we're thankful that all of you folks could make it out here, especially the new guys as well. XMD BD from Oregon, how you doing? And what we do is we like to say thank you. And our weekly thank you ebook giveaway is The Fourth Turning. Fourth Turning is a pretty interesting book because it really does kind of give you a good insight and picture as to what's going on right now. It's not new. What's going on is not new. And this book talks about it, explains it, and it really does put things into perspective. So the fourth turning illuminates the past, explains the present, and reimagines the future. Most remarkably, it offers an utterly persuasive prophecy about how America's past will predict its future. So this is the book that we're going to be giving away. Some house rules to giving away this book. Download the Kindle app from your phone or tablet's app store. These are free, so go ahead and download it. Be the first to answer correctly in this live stream before the timer runs out. You're going to have about a minute and 30 seconds. U.S. winners will be given a link where to download the ebook. Winners outside the U.S. will be given an alternative book or alternative gift at our discretion. And again, that's because Amazon does not they don't allow ebook links from outside the U.S. So we'll have to give you an alternative prize there. And you're going to have to provide us with an email during this live stream. And what will happen is my colleague Vincent, he's standing by. He's always standing by. He's always there. Thank you, Vincent. He'll be muting your comments. So that way what will happen is you'll go ahead and you'll give your email. It's muted. Nobody sees it except us. And that way we'll have your email and we'll know where to send your book, The Fourth Turning. So having said all of that, hope everybody's ready. I hope you guys had a chance to watch the G. Edward Griffin interview. He does go by the name Mr. G. So if I say Mr. G, it's out of respect. It's what the man likes. So with that, the question. Last week, Mr. G said something along the lines of, before governments would pay for war through taxation, today governments use a new tool to pay for wars. That tool is blank. Blank, blank, blank. Okay, so here we go. Let's let's see if let's see who gets it. You got about a minute more. Let's see. Joe San Martin, fourth turning relevant worldwide, not just you. You know what, Joe? That's absolutely correct. I'd have to agree with you 100% there. Uh, Rusty Shackelford. Rusty Shackelford, he's got it. Okay, Rusty Shackelford, he's got the book. Let's put it up there. He's the first one to say it. Inflation. Inflation was what we were looking for. It's what Mr. G had mentioned as to what governments are doing. Before was taxation to pay for a lot of things, and now it's inflation. And just to confirm, here's Mr. G in his own words.
When governments have to pay for wars only through direct taxes, as they used to be, wars were not as frequent and they weren't as big and they didn't last as long, is because they just ran out of money. And the only reason a nation would fight a war is if it was truly in self-defense. Aggressive wars are expensive. And so once you can get money from the citizens without taxing them, which means once you can get your money for your war through inflation, which the average person does not understand who's doing that and where the money goes, then the limits are off. So in that sense, yes, the arrival of fiat money and central banking was like taking the brakes off of the war machine.
Okay, so there you go. And no worries if you didn't get it, if you didn't get the answer in time, we're going to be looking for some great comments and participation, and we'll be giving away up to maybe perhaps 5 more of the Build Your Own Bank ebooks by Aeon Schmidt. This book has been doing really well on Amazon. A lot of people have been asking us questions about it, so we decided to continue with this. And again, just participate and give us some good comments and participation. So, having said that, again, Rusty Shackelford, you got it, my man. I think you answered that one pretty quick. That's one of the quickest that anybody answered it. So let's see, Bruce Jones. Yeah, you also got it right. Once in Exile. Um, again, Paul Eden, Fossil Man. Okay, we've seen some new names here. Appreciate that. So let's head on over to our website, silverbullion.com.sg. Let me refresh this here, and I just want to take a look at the gold and silver price. Let me put this over in U.S. dollars. Right now we have it in Singapore dollars. Okay. So again, our storage promotion is still on, 75% off transfer in charges. The good thing about that, when you do transfer your bullion to us, we are going to check it, and we are going to absolutely let you know if it is what the bar states it is or what the coin states it is. We're one of the few vaults, if not the only vault, that will actually check the gold and silver going into it. So it's one of the key differences here. So here we go. Silver 23.93, up just a bit. Gold relatively the same. So no significant change right now. And nickel, we're pretty high on nickel. It's at 14,000 per ton. So nickel is still doing okay this year overall. It's making a little bit of a bounce back, a little bit of a comeback. P2P loan rates. These are some of the loan rates. What this is, P2P, is basically when you store with us, you can go ahead and use your gold and silver as collateral to take out a secure peer-to-peer low interest loan. And it's really a good thing. It's something where, again, a lot of us, we buy gold and silver and it just kind of sits at home in a safe. Some of you guys buried it in your backyard. But with this, when you store it in our vault, you keep that investment alive and you can go ahead and borrow against it while still retaining ownership. This is not a lease. You retain full ownership. And we have a lot of guys who are into this program. It's one of the things, again, that separates us. Gold silver ratio, we're at 79.4. So we came a little back under that 80 level. I know we bounced back up to 80, 81 last week. It's still, if you're looking at buying gold or silver and you're not sure which one to get, this is something that'll help you decide the ratio. When it's about 80 to 1, it's time to go for silver. When it's about 50 to 1 or so, it's a time to switch back to gold. And the simplest way to do this is you take the the spot gold price divided by the spot silver price, and you're going to get a number. In this case, that number would be 79.4. So these are, again, a few things that can help you to make your decisions as to what you'd like to buy, silver or gold. Looking at some news, some things I bookmarked. Um, so we had the House in the U.S. pass a 2.2 trillion stimulus bill. So they passed a 2.2 trillion stimulus bill. I'll get into that, but first I want to thank. Let's see here. Debt and regret. Thank you. Appreciate that. Thank you very much. The Wall Street Journal claims there are no safe havens in the next crash, saying gold will crash also. Do you think this could happen? Straight up, no. Straight up, no. Thing is, with gold, with silver, you have a physical item, something very, very tangible. The world has always known it to be money. And this is one thing as investors, we got to understand that it's not just an investment, it's also an insurance exactly for these types of things. Systemic wealth protection, that's what it does. It stores the value of let's just say fiat in a sense, or it's a commodity. It's something real. And when things really get bad, or let's just say, I mean, there's still going to be opportunities out there, but real things are going to trade or purchase real things. So, in other words, commodity to commodity. That's just the way I look at it. Something real will be able to get something else that's real, and so much of that something else, a certain quantity of whatever that might be. Like you look at the gold to oil ratio, silver to oil ratio, things like that. That's where it comes into play. So Wall Street Journal, I mean, they have their own opinion. They have their opinion. You have your opinion. I have my opinion. But it'll never lose that nominal amount. Hard to say, but the tradability part, the transaction part, where you get so much for something, that part you will not. It'll always be there. Like I said, the world always knows or has known gold and silver to be money. And if that time does come again where things really get bad, what are they going to fall back to? People are going to be looking for something that they have confidence in. Money is all about confidence, and that confidence has always been gold and silver. So with that, I'm very comfortable, extremely comfortable in not worrying too much about that. And gold and silver will be there as a store of value. Great question. So let me get back to thank you. Let me get back to this here where they passed the stimulus bill. Now, this guy, he explains it very well, which is why I want to go ahead and go over to this website, and I think there should be a clip here that I'll go ahead and play, and hopefully this will come out okay. Okay, let me get here. Okay, there should be a clip here. Okay, so this guy, he'll explain it well. Bear with the first 15, 20 seconds. It's always an advertisement.
In a presidential campaign like no other, who will win the race to the White House? With rising unemployment and racial tensions escalating, which candidate will US voters turn to? What would another 4 years of a Trump presidency bring?
Okay, so we'll just get
Or is
through
this
the ad,
opportunity
and then
for
this
Americans
gentleman
to
explains it pretty
reset
well.
the
I think it
country's
takes about
direction?
3 minutes or so, but he has a very good explanation.
When most people think about printing money, you think about a printing press. The images of printing presses going wild with dollar bills shooting off of them. The reality is quite different. It's all done digitally today. We live in a digital age. So really, money is just numbers on a screen. I'm currently a vice president at Altamont Capital Partners, a middle market private equity fund based in Palo Alto. And I'm currently on a mission to demystify the world of finance through storytelling. So one of the most common questions I get today, where does all this money come from? You've got stimulus checks, PPP funds, Main Street lending program, all of this money being pumped out into the economy. But where does it come from? You can go crazy with the details of figuring this all out, but it's really quite simple. So let's dive into it. Most people assume that government funds all this spending with taxes. that they collect taxes and then use them to fund these programs. But the reality is actually quite different. We run a deficit, meaning we spend more than we bring in. So then where does all the money come from? Well, in simple terms, we borrow it. There are really three key players to be aware of in this dynamic: Congress, the Treasury Department, and the Federal Reserve, or the Fed for short. Congress jockeys over the legislation and authorizes the bill for a $1,200 check to all of these people. They pass it along to the Treasury Department. So the Treasury issues bonds, bills, and notes, which are essentially just IOUs. They're issuing a promise to pay back the borrowed money later with a little bit of interest. The buyers of these IOUs, who are providing the loaned money, can really be anyone: individuals, institutions, sovereign governments. But the big one that everyone talks about today is the Fed. And the Fed is an interesting buyer here because it has a magical power. It can actually create the money. But we're in the digital age. So when we talk about money printing, which everyone wants to talk about today, it's not the money printing that you know from historical examples, Weimar Germany, where they were printing money and putting them in wheelbarrows to take to the people that needed it. So the money printing that the Fed does is digital. Essentially, they can simply click a button on a screen and credit the Treasury Department with the money, purchasing the IOUs, purchasing the bonds and T-bills, and credit the Treasury with the money. The Fed then holds those IOUs on its balance sheet as assets, and that balance sheet has ballooned this year to over $7 trillion. So the clear worry here is about inflation. Inflation really occurs, in simple terms, when you have too much money chasing too few goods. We don't really have that problem today. Much of the funding that went into the market, the stimulus spending, the government programs, is being used to plug a hole that existed due to the pandemic. However, the concern is that in future, if the government does not know when to pull back on all of these programs, or pull back on the size of the Fed's balance sheet and its money printing activities, that you may have a situation where there is too much demand and not enough supply, which leads to prices rising, and that is the inflation that we talk about.
Okay, so that guy makes a pretty good point. How money is actually created and how inflation comes into play. Depth and regret. Just to touch on your question one more time. Um, some people they do say that, other people don't. Uh, I guess basically, you know, let's go back and take a look at Jim Rogers, where he's been calling for $1,000 gold, and that's when he will seriously buy gold again. Well, we went the other way. We're just about double that $1,000 point. So the thing is, even experts get it wrong, and just go with what you feel, what you're comfortable with, and that's the best thing you can do. Just go with what you know, what you feel. Research as well on your own, and that way you'll be able to live with your decision much better than if this guy said that guy said this, and then it's how it is, right? So again, that is a good question. I just want to go down a bit more, take a few comments here, really really quick. um let's see. I think I saw something down here. Okay. Yeah, fat vegan again, thank you. um will silver hit 1-to-1 with gold availability? There are people who say a 1-to-1 ratio again. I i mean, if you're asking me personally, I can see maybe a 30-to-1. I can see it getting down to there. I feel comfortable saying that. 1-to-1 is that'd be pretty great. I mean, if you've been buying silver all this time, that would be ideal, phenomenal. But for me personally, I feel comfortable with about a 30-to-1, 30-to-1 ratio. So that's my opinion on it. But again, it's just my opinion. You hear guys who say 1-to-1. So it's possible. I mean, anything's possible, right? The best thing you can do though is to absolutely have physical gold and physical silver. So that's a good That's a good point there. Good point there as well. So let me get back to a few more items on Twitter. So I think that's a pretty good explanation on money creation. I myself always say money printing, but it's just a common way that we look at it. We say printing money. Let's see. Legendary tech investor Bill Gurley says today's. Let me get into this. Better than gold. So this is something that caught my attention. Whenever I see things better than gold, better than silver, I like to see what they're talking about. This is from Business Insider. And so legendary tech investor Bill Gurley says today's markets remind him of the dot-com bubble. Dot-com bubble. So a few key points. So legendary tech investor says where we are today reminds him of the 90s dot-com bubble. There's certainly what I would call a highly speculative nature to the markets today, a willingness to take on risks, a willingness to get excited about projects that may be 5 or 10 years into the future. Other investors, like Stanley Druckenmiller, have drawn similar conclusions about today's technology stocks. Okay, so we'll get into it. I really can't speculate or know exactly what it was or the confluence of the events that led to that, but we are living in a more speculative technology market for sure. Other investors have echoed these concerns about frenzied traders pushing technology stocks into dangerously high territories. A lot of us are seeing disconnects with the markets. Top 5 tech stocks: Microsoft, Apple, Amazon, Alphabet, and Facebook make up nearly a quarter of the S&P 500. A quarter of the S&P 500. Remember that word, a quarter. Okay, they make up a quarter of it. Billionaire investor Stanley Druckenmiller said last year in September that the market was in a raging mania after cloud platform Snowflake soared as much as 165% on its IPO day. Famed economist Rosenberg said it reminded him of a frenzy that took place in the dot-com bubble. And here we go. But some argue there's a large difference between the internet companies of the 90s and tech giants of today. Billionaire Leon Cooperman said last week that he owns Amazon, Alphabet, Facebook, and Microsoft, and that they're richly valued but not expensive. And he even went so far as to say, called them better than gold. Better than gold. What do you folks think about? What do you think about that? Are those stocks better than gold? I mean, we had that question earlier about if gold will drop. It's a physical item. It has intrinsic value. But what about these tech stocks, these tech companies? Are they better than gold? It's a question I'll throw out to you folks, and I'll let you folks go ahead and answer that. How do you feel about that? Is it better than gold? For me, again, if you were to ask me, I would say this is the investment side. I mean, there's an investment side of gold and silver, and then there's the insurance side of gold and silver. And so for me, I'm always looking at the insurance side. Again, this is about not just about wealth protection, but systemic wealth protection. And this is why, again, I do look at things like silver and gold and holding silver and gold. Okay, let's take a look at a few more items here. Let's see. There have been many other fiat monetary systems in the past. When these systems collapsed, these societies almost universally returned to sound money, that is to say, gold and silver. And this is what exactly we are talking about. A peek back. Let me go to this here. It's another video clip from CNBC, and this was back in July. And these are what some people have to say back in July, which still pretty relevant. So again, let's just get through this first.
In a presidential camp,
we'll get through this first 20 seconds of the ads. Let me take a look at some comments. Silver Gold, hello, how you doing? RR, debt is a driving force of the economy. Absolutely right. Absolutely correct there. We are a debt-driven economy, just as that video also pointed out. Let's see what else is out there. Need to be a little louder next time, really. We're not loud enough? Okay. All right. So anyway, let's take a look at this video.
Welcome back to Power Lunch. I'm Seema Modi. Gold isn't the only hot metal this year. Silver lower today, but check out these gains, up 26% this year, currently trading at around a 7-year high. Analysts at Citi crediting the move to improving inflation and the potential for more demand tied to green investments should Democratic candidate Joe Biden win the U.S. presidency. Let's bring in the Trading Nation team to discuss. Bill Baruch of Blue Line Capital and Gina Sanchez of Chantico Global. It's good to see you both. Guys, you see silver here, this big outperformance. Gina, what do you think is the main catalyst here?
Well, there are two catalysts. Silver is technically a precious metal, but it has its foot in both the camp of precious and industrial metals. So part of what's driving this is the continued expectation of continued stimulus and its store of value. And so similar to gold, it's been pushed up. But it's also been pushed up because there is, if you look at copper as an example, copper has been surging on the expectation that 2020 and the second half of 2020 is going to be a huge recovery. That is also being priced into silver. That's the part of the story that may have the fly in the ointment. We will see if the prices can hold up. Certainly stimulus will keep driving it, but you also have to believe that the economy is going to recover and recover very strongly at the latter half of this year to buy these prices.
Trading at $22.75. Bill, do you think this move can last?
I love the precious metals, and I've always said that you need a portion of your portfolio at minimum in precious metals. So silver has some room to run here. I think we could see $26. I think that's in the cards. But I always say you cannot chase silver and gold for that matter when everybody else is screaming for it. That's when you want to be capitalizing on silver and gold that you already own. So if you take a look at the chart I provided, go back to this historic run of $50 in 2011. It gives me a good resistance to look at that $26 target. And then that was also support back down in 2011, 2012. So previous support, now resistance. I think $30 could be in the cards too, but I think you need to be patient. You need to wait for these prices to come back in. 21.25 was the 2016 high after Brexit. That's going to be a good support level. If we can stay above there, it's going to be constructive. And there's a lot of different sizes and futures contracts that people can look to invest in silver from 1,000 ounces all the way up to 5,000 ounces. So it is a very flexible investment.
Interesting perspective, Bill and Gina. Thanks. And head to Trading Nation, our website, or follow us.
Okay, so those were some pretty interesting things that were said there. On one side, they're looking at stimulus to push up silver price, and they were also looking at copper to see if it's a gauge on how silver is doing on the industrial side. The gentleman also says how silver should be in your portfolio. Says a few other things as well, but point being, silver is something it is volatile. You need the patience. You need the patience. Definitely need the patience. It is again a volatile metal to invest in. But there is so much more upside in silver right now, and still a lot of people are very, very much so positive on silver. Helsinki comment. You're welcome. Jim Willie and his view on silver and gold, calling silver 700. If so, what is your view? My view, 700. I think it's a bit optimistic. I can't say I see 700 in the near future, but who knows? But I do think you will see that $80, $100 silver coming into play short term. I shouldn't say short term, but within a few years at least. Anyway, I do see that. If not later this year or next year, I think at least for the $80 point, I think you'll see getting to 100 maybe late next year or the year after. I mean, I think there's just too many things going on right now that are going to push the price up. Again, as this as was mentioned, the stimulus checks for one thing. There's no end in sight. No end in sight for that. The economy is taking quite a bit longer to come back. It's just my opinion. I do see silver rising without question. Without question. Let me look at a few more comments, and I'll get back to a few things that I wanted to get through. But yeah, that's a very optimistic price. I mean, for me, 80, 100 around there, it's okay. A few more comments. Okay. Let's see. Silver and gold are real money, Bruce Jones. That is true. Okay, so let me get back to a few things that I wanted to share with you guys that came out on Twitter. And this probably being one of the more important things because what he says and what he does affects not just U.S. economy, but economies all over the world. It affects policies all over the world. It's what he says does carry some weight. So just want to go ahead and play his clip here.
I'll have to, because I want to begin by thanking all of the incredible medical professionals, the doctors, the nurses, everybody at Walter Reed Medical Center. I think it's the finest in the world for the incredible job they've been doing. I came here, wasn't feeling so well. I feel much better now. We're working hard to get me all the way back. I have to be back because we still have to make America great again. We've done an awfully good job of that, but we still have steps to go and we have to finish that job. And I'll be back. I think I'll be back soon. And I look forward to finishing up the campaign the way it was started and the way we've been doing and the kind of numbers that we've been doing. We've been so proud of it. But this was something that happened, and it's happened to millions of people all over the world, and I'm fighting for them, not just in the U.S. I'm fighting for them all over the world. We're going to beat this coronavirus or whatever you want to call it, and we're going to beat it soundly. So many things have happened. If you look at the therapeutics, which I'm taking right now, some of them, and others are coming out soon that are looking like, frankly, they're miracles. If you want to know the truth, they're miracles. People criticize me when I say that, but we have things happening that look like they're miracles coming down from God. So I just want to tell you that I'm starting to feel good. You don't know over the next period of a few days. I guess that's the real test. So we'll be seeing what happens over those next couple of days. I just want to be so thankful for all of the support I've seen, whether it's on television or reading about it. I most of all appreciate what's been said by the American people, by almost a bipartisan consensus of American people. It's a beautiful thing to see, and I very much appreciate it, and I won't forget it. I promise you that. I also want to thank the leaders of the world for their condolences, and they know what we're going through. They know what, as your leader, what I have to go through. But I had no choice because I just didn't want to stay in the White House. I was given that alternative. Stay in the White House, lock yourself in, don't ever leave, don't even go to the Oval Office. Just stay upstairs and enjoy it. Don't see people, don't talk to people, and just be done with it. And I can't do that. I had to be out front, and this is America. This is the United States. This is the greatest country in the world. This is the most powerful country in the world. I can't be locked up in a room upstairs and totally safe and just say, hey, whatever happens, happens. I can't do that. We have to confront problems. As a leader, you have to confront problems. There's never been a great leader that would have done that. So that's where it is. I'm doing well. I want to thank everybody. Our First Lady is doing very well. Melania asked me to say something as to the respect that she has for our country, the love that she has for our country. And we're both doing well. Melania is really handling it very nicely. As you've probably read, she's slightly younger than me, just a little tiny bit. And therefore, just we know the disease, we know the situation with age versus younger people. And Melania is handling it statistically like it's supposed to be handled. And that makes me very happy, and it makes the country very happy. But I'm also doing well, and I think we're going to have a very good result. Again, over the next few days, we're going to probably know for sure. So I just want to thank everybody out there, everybody, all over the world, specifically the United States. The outpouring of love has been incredible. I will never forget. Thank you very much.
Okay, so not to be political, I don't want this to be a political thing. The reason why I show that is because what he says does absolutely affect the economy, and there's no getting around that. So, I know when he first went in, we saw the markets take a bit of a hit. We saw gold and silver rise a bit, and so the markets do respond to things he says, things he does, and there's no getting around that. So again, I don't want this to be a political thing. But how do you think this is going to affect the markets? Let's say he gets better. Or how do you feel the markets are going to do? How do you feel gold and silver are going to do? Or let's say if there's some uncertainty, again, how do you think the markets are going to do? Because it is going to weigh in on the markets, and somehow, some way, it's going to weigh in. So I'm curious to see what you folks have to say. Again, don't want it to be a political thing. It's just something that does affect the market. So let's just look at it from that perspective and how it affects things like silver and gold. So I'm just curious as to what you guys have to say with that. So I'll be looking for your comments. I'll share a couple more things and then I'll get to some clips from Mr. G. Okay, Brad Houston. Um, yes, they did introduce a new bill, and it's a complete ban on evictions and foreclosures. A 12-month complete ban on evictions and foreclosures. I need to check in on this, but this is something we talked about before, where the government was going to have to step in as far as housing went. What's going to happen with rents? What's going to happen with landlords? The mom and pop who did the right thing, saved up enough to get their home, and then went ahead and got a second home. So we're going to have to, see what happens as time goes on with that. And then we had Christine Lagarde. Pleased to see our findings on the benefits and the challenges of a digital euro. In these times of rapid technology progress, we must ensure that our payment systems continue to keep up with the needs of the people who use them. So that's Christine Lagarde. So let me go through some comments. Let's see. Jack Parsons. Sorry I'm late. All right. It's 1 ounce of silver for everyone. So don't be late. Don't be tardy, Jack. Okay. Just kidding. Let's see what else is out there. Let's see. Full name: bought silver for the future, not to trade. Yeah, some people. I mean, of course, some guys want to trade, especially when they get ETFs and things like that. But I think most guys who buy bullion, they're in it long term. They are looking to buy and hold the original hodlers. So it's a good point there. Um, okay, so I want to get to something that Mr. G said, G. Edward Griffin, and I just want to get your reactions to that as well. Okay, so here we go.
I mean, let's go back to zero or one. What is the Federal Reserve System? It's a cartel. What's the purpose of a cartel? The purpose of all cartels, only purpose, is to advance the interests of the members of the cartel. Period. It has no other reason to exist. So now, if you say, well, the mandate for the Fed was to, prevent inflation or improve jobs, hogwash. That was never. Maybe that's what they said they were doing, but that's not what cartels do. Cartels are prepared to destroy the purchasing power of the dollar and to destroy jobs if it furthers the position or the advantage of the members of the cartel. Now, if the cartel says, hey, it's in our best interest to have high employment and to have a stable dollar, then they might actually do things to do that. But the reason for doing it is not because it helps the American people, it's because it helps the cartel. We have to keep that in mind, because all of the things they tell us about, well, we're trying to, dampen inflation. Inflation is running very high, or we need to stimulate the economy. People need money. They don't care about people at all. It's just they have to say certain things so that people won't, be outside their door with pitchforks, which they probably would be if they understood what was really going on.
Okay, so Mr. G talks about cartels, and so I want to read you the origins of a cartel, according to Mr. G. So go ahead and comment as you folks wish. This is from his book, The Creature from Jekyll Island: A Second Look at the Federal Reserve. Origins of the cartel. The 6 men who attended the secret meeting on Jekyll Island, where the Federal Reserve was conceived, represented an estimated 1/4 of the total wealth of the entire world. Remember, I told you that remember 25%, 1/4 that the tech stocks, those bank stocks generally basically have right now, quarter of the market. These gentlemen had a quarter of the wealth in the world, and they were Nelson Aldrich, Republican whip in the Senate, chairman of the National Monetary Commission, father-in-law father-in-law to John D. Rockefeller Jr. Okay, it's a name we still hear. Henry P. Davison, senior partner of J.P. Morgan and Company. It's a name we still hear. A. Piot Andrew, Assistant Secretary of the Treasury. Frank A. Vanderlip, President of the National City Bank of New York, representing William Rockefeller. Benjamin Strong, head of J.P. Morgan's Bankers Trust Company, later to become the head of the system. Paul M. Warburg, a partner in Kuhn, Loeb and Company, representing the Rothschilds and the Warburgs in Europe. These were the beginnings of what Mr. G. Edward Griffin calls the cartel. It's names that have never left. Goes on to say, had it been known that rival factions of the banking community had joined together, the public would have been alerted to the possibility that the bankers were plotting an agreement in restraint of trade, which, of course, is exactly what they were doing. What emerged was a cartel agreement with 5 objectives: stop the growing competition from the nation's newer banks, obtain a franchise to create money out of nothing. Money out of nothing. We saw that it's just digits floating around. Money out of nothing for the purpose of lending. Get control of the reserves of all banks so that the more reckless ones would not be expected or exposed to currency drains and bank runs, and get the taxpayer to pick up the cartel's inevitable losses. Get the taxpayer to pick up the bill. And convince Congress, probably the most important part, convince Congress that the purpose was to protect the public. Purpose was to protect the public. It was realized that the bankers would have to become partners with the politicians, and that the structure of the cartel would have to be a central bank. So those are from Mr. G. Edward Griffin's book, The Creature from Jekyll Island, a second look at the Federal Reserve. Um, it's a very thick book, some 600-700 pages in it, but he really lays it out. So I'm interested again to see what you folks have to say here. Let's see. One Royal Wolf, how you doing? Bit late but made it. It's an ounce of silver. Every time someone's tardy, gotta cough up an ounce of silver for everyone in the room. But nice to see you. Anyway, sorry, let me take a look at a few more comments. And again, if you are new here, go ahead and just type in new and where you're from. Let's see. Let me take a look at some of the comments here. Let's see. Yeah, a lot of oh geez. Let me see what's out here. Pabar, you realize that when you have to convince someone before you can get them to do something, and if our future depends on a politician, then we have failed as Americans, per George Washington. I think generally that goes for everyone. And again, it falls into the whole build your own bank, especially that book by Aon Schmidt. We should try to not depend on government as much as we can. Government tends to grow bigger and bigger over time, tends to slap on more regulations over time, which chokes out smaller businesses, which, become less able to compete because of regulations and costs and whatnot. And you really need to understand the concept of building your own bank and having one foot in the current financial system and one foot out of the financial system. So, Paul, it's you're right there. That's for sure. In fact, you know what? Uh, why don't you go ahead? I'll get Vincent to ask for your email. Vincent, if you're there, maybe we'll go ahead and we'll send that book, Build Your Own Bank, to Pabar, and so maybe he can go through it and expand on exactly what he's talking about. It's a good comment. It's a good comment there. Let me see other comments. Let me see what we have here. Okay, so all right, let's move on. So those were some comments from Mr. G, and then there was another message that he gave that I want to share with you folks. So here's something else that Mr. G had to say.
The Fed is a not just a war; it's a cancer. It's going to kill us. It's it's uh, it's deadly. And yes, I want to end it. I want to replace it with free, honest, open money systems and honest banking, not corrupt banking, not backroom banking. I want real, I think banks can serve and do serve a very valuable purpose. I'm not anti banks at all. I'm anti crooked banks. I'm anti banks that make special deals with crooked politicians for inside agendas and private agendas that we don't approve of. That's what I'm against. And in order to clear that up, we have to take the privileges away from banks that they haven't, that other companies do not. I mean, banks can lie and cheat and steal, and nobody ever goes to prison. I mean, look, the banks, we see the news reports all the time. Well, so and so bank just been proven they scammed the people by so many billions of dollars, and now they're going to suffer. They're going to pay $1 billion fine. Oh, isn't that terrible? And the reader says, oh yeah, we're going to get those banks this time. $1 billion fine is nothing to these banks. It's the cost of doing business. The scam that they perpetuated earned them 100 billion. So now we're going to take 1 billion from them. And they say, oh, that's not so bad. Let's do it again. Not only that, but where does the money go? To the people who were scammed? No, it goes to the government. There's another group of scammers over there. So the governments and the banks work together, and every once in a while, the government goes to the banks and says, look, we got to fine you, and we could use the money too. So what can you afford to pay us? And so forth. And they work it out. So the money goes to the government, and the politicians say, okay, you're free and clear now. Nobody goes to jail. And the population says, hooray, the bank paid a big fine. And who really paid the fine? The stockholders of the bank. Now, the managers and the executives of the bank get bonuses. And they're back there the next year to do the same thing again. Why don't people wake up and see the scam that's right in front of their eyes? They would put an end to it right now. If they could just hear what I said, they would know it's true. But this message is not allowed in mainstream media.
Okay, Mr. G, preaching, just preaching and preaching, preach on. G. Edward Griffin. So what do you folks think about that? Where he says the Fed is the cancer. He's not anti-bank. Banks do serve a purpose. But the Fed, according to Mr. G, is a cancer. How do you folks feel about that? I mean, since their inception in 1913, the dollar's lost about 96% of its purchasing power. It's has two mandates: maximum employment and price stability, which it's never been able to hold. I mean, we've still had recessions, depressions all along the way. So, if the Fed is not doing what they're supposed to be doing, and with the incredible power that is placed in them, I mean, what do we do? I mean, what are we supposed to do? And again, this is where, holding things like silver and gold is your investment slash insurance. We do need banks, no doubt about that. And central banks are headed towards digital currency. So again, things we all need to watch. So let me move forward. And I started this last week, but I want to continue on. I'll pick up on it and continue on because there were things that Peter Schiff said in our interview a couple of weeks ago that were pretty important that we know. Pretty much I would say spot on in some sense. I mean, depending on which side of the argument you're on. But again, after speaking with him, I want to start off with something he said regarding Greenspan, Powell, and gold, and then we'll discuss these things along the way.
When Greenspan was Fed chairman and gold was trading at about $350 an ounce. Right now we're, just under 2,000, right? 1950. But he used to talk about $300 and $400 gold. And what he used to say publicly was that if gold price went down to 300, he knew that he was too tight. And if gold got up towards 400, he knew he was too loose. And so he would use the price of gold as a signal, a market signal, as to whether or not he had the right monetary policy. So if you saw the price of gold going up too much, hey, I'm creating too much inflation, I better raise rates, tighten policy. And if gold went down, oh, we're too tight, right? So he was looking at gold.
Okay, so higher gold prices does indicate inflation and the need to raise interest rates. Higher interest rates puts the brakes on borrowing and spending. Lower interest rates typically bring higher inflation, in that lower interest rates make it easier to borrow and to spend. So generally, we have that velocity of money picking up. Let me move on here. So gold is telling us we have inflation. I mean, the reality is it's hit all-time highs. It's still near all-time highs ever. And some people say we see it. Other people say no, we don't see the inflation. And so if we make the case that inflation is here, well, where is it? And we are quick to say it's in the markets. It's in the markets. And the increase in the money supply, it didn't go to you and me. I mean, some people are getting PPP and things like that, but generally didn't go there. It's in the markets. It's sort of contained in the markets right now, but it is going to eventually leak out. That inflation monster is going to escape the markets. It went to Wall Street, but did it did it really? So follow up on that. Let's see what Talvi Costa, because he put out some great things on his YouTube channel. I guess it's about a week ago now, but Talvi Costa explains it really well, and I want to get into that so we all kind of understand it's not just things we hear, but it's things we can actually see as well.
Here, S&P 500 versus money supply, since we've had these issues with regarding the amount of not only stimulus and the monetary part of things, but also with the lack of discipline from the central banks and governments in general. What we've seen actually is that equity markets have been, especially in terms of valuations. I can go through valuations and look at different fundamental metrics that we can see. But I think the most important part of this chart is to see that also equities are not only overvalued relative to their fundamentals, but also overvalued relative to money supply. Very different story when you look at precious metals. And I'll look at this charts in a minute here. But you can see that this chart actually almost shows like a double top, and it touched the other line of back in the tech bubble periods when we were at a very extreme. And I think that this is a very very overvalued market in general, and why I think the markets or investors will start looking at precious metals as an alternative. Another way of seeing this is just looking at.
Okay, so there you have it. Incredible valuations that we're all seeing it already, right? And the chart does show that, and the gold price is showing and confirming that we do have inflation. It's in the markets, but it is there. It's just that, again, it's in in Wall Street, and it's not generally a place where Main Street ventures into, and that's one of the biggest reasons why perhaps we're not seeing it yet. Main Street, we are going to see incredible opportunities, though. We are going to see some great opportunities, okay? We're going to see them ahead if we understand the game that G. Edward Griffin points out, Peter Schiff points out, Tavi Costa points out, a lot of people point out. We understand what gold truly is and what gold truly does, and silver as well. So let's keep our heads in the game. Stay cool. Gold and silver is going to come off the bench in relief, bottom of the ninth. This is something I talked about last week. It's going to come off in the clutch, and it's going to get the win. It's going to be epic. So let's move on to another thing that Peter Schiff said. Sort of, I'll just move on. I'll show you something Peter Schiff said, and we'll talk about it later.
Well, I mean, it's hard to say that it's the Fed and inflation that is to blame for everything, but it's certainly a very large contributing factor. But obviously, it takes, two to tango. And so the Fed has had a lot of help from the government in general, Congress and the president. They have passed a lot of laws. Now, you can argue that a lot of this spending might not have taken place, but for the willingness of the Fed to finance it, to monetize it, to artificially restrain interest rates. So the Fed has done its part. But of course, Congress didn't have to act so recklessly and irresponsibly. Just because the Fed was pouring alcohol, they didn't have to drink it.
Yeah, he makes a good metaphorical point there. It reminds me of laws back home where, if you're the bartender and you notice your patron's kind of passed out, he has too much to drink, you need to cut him off. You need to cut him off. And it's sort of like Powell. He's like the bartender right now, giving everything on the drink list to Congress, and Congress is just buying rounds for everyone. it's just a big party. But the concern is by the time bartender Paul cuts off client Congress, if ever, it's going to be maybe a bit too late, and we're all going to be stuck picking up the tab. It'll have to be paid back with interest, and in a time where currencies might actually be falling, might be devaluing a bit. And Tavi, he talks about currency devaluation that's going on all around the world.
This is not a domestic thing. It's happening. It's a phenomenon happening worldwide, and it's what we call the global synchronized debasement issue, in which every currency in the world is leading towards destruction in terms of fiat currencies, especially relative to gold. I still believe that the dollar is fundamentally stronger than any other fiat currency in the world today, but I think that ultimately gold will be proven to be the best asset to protect against the depreciation and debasement, monetary debasement globally that we're likely to see.
Okay, so Tavi talks about that the global synchronized debasement, and I think there's a lot of guys that you may have heard as well. I believe Jim Rickards may have been one of them, where he likens currencies where they're all on a parachute, all falling, drifting together, lower and lower and lower, a race to zero. I believe is what he called it. So Tavi, he took the time to actually point that out in a chart. So again, all credit to Tavi. Every video we use, all credit to Tavi Costa. And I do hope you folks take some time to go to his YouTube channel, Tavi Costa. I'm telling you, he puts out really great information there. And that's a concern. Not understanding currency debasement is happening, and therefore not knowing what to do. Not knowing what to do. We need to know what to do. In a newsletter published by Silver Bullion and written by my colleague, producer Vincent. Vincent, you're out there, you're smiling, right? He likened currency debasement to the 1975 Banquio Dam failure. Now, the dam's breaking brought on the collateral damage of 250,000 dead, millions trapped, and unimaginable calamities. So Vincent goes on to say, it's time we awake to the pressing fact that we are witnessing the greatest currency debasement experiment in humankind's history. Vincent, he nailed it. Just as the dam has a limit to the amount of water it can hold, our financial system has a limit for debt before all hell breaks loose. Given the unprecedented scale of the money printing or money, digitized money getting some keystrokes, the fallout of this or from this collapse will no doubt be the most devastating in humankind's history. People who do not understand the magnitude of this coming disaster or have not protected their wealth with gold, silver, and other hard assets are akin to living below the dam. They have significant exposure to systemic risks from the financial system. Those with gold and silver bullion in a safe jurisdiction have begun their escape from the path of this coming flood. And it's a good way to look at it. That right now this dam I guess we'd have to say it is starting to crack, starting to get a few leaks here and there. You got to position yourself where you're away from it, escape from the path of this coming flood. And Vincent talks about jurisdictions. A broken dam will cause a flood, and a broke government will cause a flood of its currency to return home. And that's where we may be looking at things like inflation, hyperinflation. I mean, there's just a lot of money in that system right now. Anyway, it's a great article by Vincent, my colleague. Thank you. Appreciate that article. It's really, really good. Sign up at Silver Bullion. Create an account, and you'll get some of Vincent's newsletters as well. He's always got some good stuff. So moving on, another thing Peter Schiff had to say about the military.
We won't be able to afford to be the police of the world. Look, what happened to the Soviet Union's military when the Soviet Union collapsed? I mean, it's nothing like it used to be. Yes, Russia still has a military, but not like the Soviet Union. And Russia's influence has, diminished dramatically. I mean, it's not the Soviet Union. We don't have that huge power anymore. Not over Europe, but over the entire world. So, yes, I mean, I think that, America is the sole remaining superpower once the Soviet Union collapsed, but America's collapse is inevitable. And when it does, we're going to be forced to tighten our belt. And I actually think that's a good thing. I mean, we have too big a presence. We have too many troops all over the world. We're spending too much money on warfare, right? I don't think it's defense. I think it's offense. And some people, I think a best offense is a good defense. And that's, kind of real we need to be, just defend the United States. We don't have to defend the entire world. The world can take care of itself, but we're not going to be able to afford it. We're not going to be able to supply the troops or pay the troops. I mean, so we're going to have to bring them home, and we're going to have to seriously cut back on military spending. But we're going to have to cut back on domestic spending too. In fact, hopefully, I want to see domestic spending reduced even more, because I think the majority of what the federal government spends money on should be on national defense. So that's really what I want the federal government to do. Constitutionally, that's its mandate. That's its mission. Domestic affairs are supposed to be handled by the states. And so they're the ones that are...
Okay, so Peter Schiff making his point. Basically, the U.S. is broke. And you might say the U.S. cannot be broke if it has that printing press or that super finger that is attached to Jerome Powell to go ahead and create money out of nothing with just a keystroke. The problem with that is the printing press, let's just call it printing press, is printing broken and corrupt money. I think we all know this by now. It's printing broken and corrupt money. The Fed can print all the corrupt money Congress authorizes it to. And then the problem becomes you and I. You and I are not going to accept it. Money is only as good as the confidence we placed in it. And a lot of us are losing our confidence. We still have to use it, but we're losing confidence. And again, this is where I know you are buying, or why you're buying your gold and silver. Same as myself. Money is only as good as the confidence we place in it. If we have no confidence in any and all fiat, then fiat will simply cease to exist as money. Cease to exist as money. I want to this next one, another clip from Talvi Costa. It's something a lot of us did not realize, and I think we all should listen very carefully to what he's saying, because something right around the corner is coming up. This one is very important. All credit to Talvi Costa.
The average maturity of treasuries have been declining significantly, and that is an issue as well. If you calculate about, in my view, that's the forthcoming macro event that is going to be the most important one, is about $8.5 trillion of treasuries will be maturing in the next 12 months. $8.5 trillion. So they're going to have to be at the situation that the government is today. A lot of the debt's going to have to be rolled. And the question is, who is going to be the buyer? And I think that's a very important question. A lot of people are seeing this the wrong way. Let's look at Treasury holdings first, because Treasury holdings, most people are including the marketable securities and the non-marketable securities. Non-marketable securities are mostly not owned by the Federal Reserve or foreign investors in general. And I think it's important to look at, distinguish that difference. And when you're looking at the percentage of ownership of treasuries, you should only be looking at the marketable securities. That's what I did in this chart here. So the red line is looking at the marketable securities. So amount of the red line is the foreign holdings relative to total marketable securities, and the white line is the Federal Reserve. You can see we call this a dangerous convergence between these two lines, which shows that there's not the foreign investors have not been participating as much as the Federal Reserve recently, and I think this is going to continue to happen. That's what we call monetization of debt here in this case, which I think it's extremely positive for precious metals as well. The real question here is, with the $8.5 trillion that will be maturing in the next 12 months, who is going to be covering this hole? And I think it's going to be the Treasury, the Federal Reserve in a big way.
Okay, so this is something we're going to have to keep in mind, which is coming around the corner next year. With that, Roger Mueller, dude from Texas, how you doing? Jovian, how you doing? Welcome aboard. Losing confidence. These things that Tavi just said, losing confidence is already happening. Foreign countries do not want to buy treasuries. Okay, foreign countries do not want to buy treasuries. Treasuries fund the government. Taxes and treasuries fund the government. Foreign countries are rejecting the dollar. They don't have confidence in the US dollar. Everyone knows this, probably except for friends and family and people back in the States. We don't realize that people are trying to move away from the dollar. We just don't realize it because we don't see it. We don't have to convert our currency into another currency. And so that's why we're not really seeing it. But according to Tavi Costa, again, 8.5 trillion in treasuries will mature in 12 months. About a year, 8.5. This is another reason why guys are looking at silver and gold really being pushed up even further next year. When you got this to 8.5 trillion, it's a lot. Okay, I mean it may just be a digital stroke, but the confidence that the world has is going to become less and less in the U.S. dollar. So, I don't mean to scare anyone. This is not my intent, but to pay that, these treasuries are going to be rolled over, just as Tavi said, and bought. Going to be bought by the Fed. Nobody else really wants them right now. And the Fed looks to fast become the only buyer of U.S. debt. And when that really happens, the bond market it's going to explode. Guys have talked about this forever, and sky high interest rates will be demanded by anyone buying bonds. If they're going to buy a bond, they're going to want a very, very, very good interest rate on it to take on that risk. If the Fed is going to have to roll over treasuries, interest rates will have to come down, and that means possibly going negative. So Tavi's answer again is to get gold. The Fed is already walking the line on going negative, and a lot of that is because there's part of it anyways, because there's really no confidence left. Nobody wants to buy treasuries. No confidence. It's a big deal. So Peter Schiff also says.
I mean, once the public loses confidence in a fiat monetary system, how do you reinstill that confidence? I mean, gold is the answer. And what I think is going to happen before the United States goes on a gold standard, because obviously I think we have the least amount of incentive to do that, right? Because, the dollar is being used instead of gold. So, but what I think is going to happen is all the other nations of the world that have been using the dollar instead of gold will just start using gold again instead of the dollar. Go back to the way it was before the dollar replaced gold as the primary reserve. And again, you have to remember the reason that we were able to convince the world to switch from gold to dollars is because the dollar itself was not only backed by gold, but redeemable on demand in gold. So the dollar was as good as gold. In fact, it was better because you could take your dollars and then loan them to the US government by buying treasuries. And now you got interest, right, which you didn't get on your gold. So they had the best of both worlds. They had gold and they had interest.
Okay, so Peter says, what happens when we lose confidence? He also says other countries may go back to a form of a gold standard before even the U.S. does. And that falls in line with the chart that Tavi Costa showed us about less and less countries wanting U.S. debt. Okay, let me continue on here, and I'll go through some comments. So, if no significant trade partners and economies want U.S. debt in dollars, yes, the neutral asset they all have is gold, and gold in some form very well may be the starting point for central banks. This is what they may agree to. They're going to need some starting point, and a lot of people feel it may be gold since it is a neutral asset that is spread throughout the world. I think everyone here already knows how central banks have bought more gold than they have in the past 50 years. This is true. They have been buying up a lot of gold. And to that, I would say be and build your own bank. Get gold, get silver. I think you can already see why you should, to give yourself an option. That's the key. You want the option and the opportunity because they will come. They are going to come. It's not all gloom and doom. You do what you need to do now, and these opportunities are going to come. You're going to position yourself in an incredible place. You are definitely going to position yourself in a very, very good place. Let me take a look at some comments here before we move on. Let's see what's out here. Let's see. John Michael Karma. Federal Reserve note is being used, not a dollar. It's a good point to note. Well, it's a good point to take in. When you read it, it's Federal Reserve note. Some of you guys are familiar with the silver certificates. Um, when you read that silver certificate, it looks exactly like a dollar, except it says payable upon demand in silver, payable to bearer upon demand in silver. So back then, you actually had silver backing the dollar. You could redeem it for that silver. Today, what do you redeem it for? What do you redeem it for? I mean, you can use it to transact as currency, but you don't get that silver or even that gold backing it. Just don't have that anymore today. Okay, let me move on a bit. Let's see. Yes, I was here, and then I want to show you another clip what Tavi said about miners. Even Schiff talked about miners, so I just want to play this clip for you.
Space, as I think it relates back to what's going on the supply side of gold. Well, when you look at the capex cycle, and I've used this chart before, you look at the capex cycle has been diverging for metal prices. And the whole reason for that, in my view, well, first of all, you can see this correlation between the two, which I think it makes sense, right? As metal prices rise, miners become a little more optimistic and they begin to spend more money. So therefore, capex increases along with that. And I think this represents what's likely to happen with supply that is probably going to be constrained for longer. And it's another reason where I see a mismatch between the very large demand for gold, while we see perhaps supply staying extremely low. And one reason why we've been investing in a lot of exploration stories is because I think there is a very large lack of money and budget for exploration and discoveries overall in the world, and a lot of people not willing to touch that segment of the industry. And us working with Quentin Henney to look at that whole part as an investment, part of implementing this investment thesis. I think it all makes sense. But what's going on with miners, more importantly, is the fundamentals. The fundamentals are improving like never before. We saw capex falling apart, but we're also seeing cash flows improving. And therefore, if cash flows are improving and capex is actually staying lower, we see free cash flow surging. And that's the case here. 134% increase on a year-over-year basis of the top 20 miners in the world today by market cap. I think this chart is very interesting because I don't think prices really reflect the opportunity for the free cash flow growth going forward. If we start to see really, especially metal prices rising significantly higher from here. When you look at the miners, again, relative to if you.
Okay, so Tavi, sorry about that. Tavi's pretty high on miners. So is Schiff. They both like miners. Miners, we all know it. They've had it rough for such a long time. Silver and gold were low and it's sideways. And in that time, very, very tough time, we saw companies being basically they got sifted out. I mean, some were bought up, some went out of business, some merged with stronger companies. Management worked through the tougher times. And that's the thing whenever you buy miners, you're no longer tied into the silver and gold price. You're tied into management. I mean, silver and gold price does play a role, but probably a more significant role when you get into miners is management. And that's where you really need to do your homework. So management worked through the tougher times with low gold and silver prices. Now with higher prices and working leaner, there are, yes, great mining opportunities or companies to get into. And that is one of the it is one thing that a lot of guys are looking at to leverage on gold and silver. It's not just the physical coin or bar anymore. It's also the miners. So we are seeing that. And we already know Peter expects gold to shine, as do we. I mean, it may not feel like it, but hey, smile. It's at around all-time highs. Silver is about halfway there. They'll do well. But let's see what Talvi has to say about gold, and then we'll see what he has to say about silver.
When you look at gold, I love this chart because it's such a simple chart, and I'm not a technician, but I enjoy seeing a few trends on this, and cup and handles are probably one of my favorite forms of a technical analysis that I enjoy. And this one's probably the largest and longest cup and handle I've ever seen in my life. And it suggests that gold prices are about or are poised to break out significantly in the following months or so. And I believe in that. There was another chart that I posted recently, which was the gold prices year-over-year change that has also been breaking out. If you looked at that, which for me, the real takeaway of this chart is the similarity with the 70s, is 70s in steroids. And I think that a lot of people have been thinking about the short-term moves in gold. Oh, maybe gold already went up too much, even though it declined recently, and I don't want to touch it. Well, look at what happened exactly in the 70s was just a nonstop move to the upside. And I think it's very likely to happen the same way.
Okay, and this is what Tavi had to say about silver.
This chart is another one. I'm going to go through a little bit on silver that I think is interesting. Silver is down, 24% or so since its previous peak, now in $30 or so an ounce. What an opportunity, in my view. What an opportunity. When you look at charts like this, well, back in late 2008, we had the Federal Reserve printing close to $1.2 trillion in 4 months. Recently, we've had the Federal Reserve printing almost $3 trillion during the same time period. I mean, if you look at that back in the days in late 2008, we've had silver going parabolic to the upside here. I think it's very possible that we can see the same type of move. And we've had that kind of move recently, and now a pullback that I think it's an incredible opportunity. Matter of fact, if you look at 2010, this decline that we had about 20+% in silver, we had a very similar one, I think was February of 2010 in silver prices too. And then after that, silver just took off. So I think a lot of the short-term traders need to step back a little bit and see the opportunity. And I think that's the goal of part of the goal of this presentation too. In my view, I know this is not a conventional view. In my view, the silver miners, the gold miners will become likely the new growth stocks. And when you look at silver miners relative to NASDAQ, we're already seeing an appreciation of silver miners. I know it's very low. It's just breaking out recently. But, I think there's so much potential for that as well to become more of that aspect for a lot of investors in general. Silver.
Okay, so silver is looking good, according to Tavi. I think we all know that silver is looking good. In fact, one Royal Wolf, a correction was a good indicator of a bull market forming, not a V-shaped sort. Yeah, I'm spending every spare cent on silver and gold at the moment. A lot of us are, really trying to take advantage of the consolidation, the little pullback that we're seeing right now. So that's a good point as well. Just a few comments. Hey, everybody's happy, right? The outlook for gold and silver is good. We had a little bit of a pullback, allowed us to get back in the game. Maybe average down a bit, average cost down a bit, accumulate more, keep on adding to our positions, keep on buying a bigger insurance policy and an investment, which, is going to come around. So there's a lot to be happy for. You take a look at things around and, it may, cause you to scratch your head a bit, but underneath, there is a lot of positive things, a lot of opportunities that are going to come around. The outlook, the fundamentals, and the very real reality of what central banks and governments are doing point entirely, completely to getting gold and silver. Remember, not everything goes straight up. Okay? Not everything goes straight up. And the opportunities will be there all along the way for you to find safety and to position yourself and your generations. Having gold and silver are good, and this is your vehicle as a store of wealth for systemic wealth preservation. This is your vehicle, and again, as always, just contact us, open up an account, and for those out there who are curious or interested in storing precious metals overseas and in a favorable jurisdiction like Singapore, or would like to know about things like a precious metals IRA account, which I feel is extremely important if you have a 401k, or even for those of you in Australia with the superannuation fund. Extremely, extremely important. If you have those, contact us. Please do contact us. And we're always, always, always happy to to hear from you. So let me take a look at a few comments, and it'll be headed out. Let's see what is some of the comments here that I can post on a family show. Let's see. Let's see. Um, Joel Johnson, Fed coin, referring to central bank digital currencies, will accelerate inflation as designed. Okay, we'll see how that goes. I mean, central banks have been having a hard time implementing monetary policy, and one thing that people are thinking about is if they do go digital currency, central bank digital currency, where they have full control over it, and let's say it's a cashless, coinless system, then they can really throttle the levers on the economy. They go negative interest rates. If you got money in the bank, you're going to have to spend it. Then you're going to get that velocity of money, that inflation that they want. Things get too hot, and they'll do the opposite, try and cool things down. Without cash and coin that you can keep out of the system, the Fed, they not just the Fed but all central banks, it does make it a bit harder for them to implement monetary policy. And on the other side of it is fiscal policy, what governments want to do. So this is a little bit more of it's a much they have more control to influence economies. But again, you and I know this already, and again, it's why we do hang on to things like gold and silver. So let me see what else is out there. Let's see. Um, Always be funding. Okay, take care. Let's see. Um, Let me just get maybe one or two more comments, and then we'll head out. Um, let's see. Let's see. Try and find something here. Um, okay, yeah, Rusty Shackelford. I'll send it after the live stream. Your book, and let me see. Maybe just one more comment, and I'll head out. Let me try and find something here. Um, let's see. Well, you guys got a lot of good comments. It's hard to find one that really stands out. Um, Rolf Steiner. Well, I guess it's something to think about, right? When the USSR collapsed, there were a few years where people didn't want printed fiat currency. Yeah, that is true. I mean, even Peter Schiff talked about how things were in USSR, and um, it again, it depends how you look at it, and we need to look at it as a time of opportunity. We already know, the hardships that may come and things like that, but we also got to look at it as a time of opportunity where we are going to be able to do things that we might not have been able to do before. We're going to be able to position ourselves in places that we have not been able to do before. If you've done well all your life, you're going to be able to keep what you did or what you made, what you've earned. You're going to be able to store it in something outside the financial system in a different hard liquid asset. So again, there's things we can do. There's a lot of opportunity that's going to come our way, and just stay focused, keep our head in the game, stay positive, and I think we're all going to be okay. Main points though: be a blessing, not a burden. I mean, like I say, a lot of people are going to have it tough. So try and be that blessing because you already know what's coming ahead. Take care of your family, take care of your friends, be that blessing because a lot of people are going to need help. And above all, just as I always say, saddle up for what's coming ahead and silver up as well. I'll see you guys next week. Take care. Take care of each other. See you.